Welcome to Daily Conversation. This is Mr. K.
This is Eric.
Yeah, today is the 2nd of March 2021 and the time now is 6:18 a.m. Well, today our topic is insurance plays an important role in many aspects in our life. What's your insurance plans and what are your considerations? So before we get started, please click the like button and subscribe to our YouTube channel. All right, so here we go. Yep. All right, so yeah, today I'm going to talk about uh my medical card. So how about you?
Mm, yeah, I also want to talk about my personal insurance.
Oh, okay. Yep. So yeah, for me, my insurance actually is the medical card. Uh, but also a portion of my uh premium uh they will go to the fund. uh it is something like a unit funds, and then they will take my money to invest, and then I can get some money back uh 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 yeah, depending on which year I want to stop my insurance. Yep. And then yeah, actually they give me a book, and then they calculate the figure, the amount of money that I can get uh, after a few years. So um, I take the figure of after 30 years. So I bought this insurance at the age of 25. So it's last year, and then my monthly insurance premium is 200. Yep. So after 30 years, it means at the age of 55. Um, okay. Uh, the cash value that I can get at that time is yeah, they calculate two figure because they cannot get an accurate uh, investment return. So the best scenario is 70K, and then the worst scenario is 38K. So and then yeah, for this let's take uh, uh the, the the middle of this figure, and then I take 50K after 30 years. Yeah, this is not a big figure if we consider to use a monthly 200 ringgit to invest. And then yeah, I try to use the compound interest calculator, and then I also put in the figure 200 monthly contribution, and then the length of time in years is 30 years, and then the estimated interest rate, and then I put 10%, and then the interest rate variance, so I put 2%. It means that it is a plus or minus 2%. Yep. And then compound annually, and then the figure is 394K. So compare this 394 and 50. So yeah, really this investment is not a big figure. Yeah, but considering this is an insurance plan, so it means that uh, not only for the investment part, and then uh, I have the medical card, which can help me to cover some cost in case I go to private hospital.
Yeah, just now,
Yep.
what interest rate you use?
To calculate, right, I use 10%.
Oh.
Yeah, if because I compare these 200 I can use to invest, and then
Yeah.
according to our calculation in previous topic, we can easily get 10%, right, if we invest to the index.
Yeah.
Yeah. So yeah, so this is the difference. The difference is 394 versus 50K.
Mm.
Yep. And then yeah, so this is basically my insurance plan.
Mm.
Yep.
So, do you think it's good?
Yeah, standing at a point that to look at the return, of course, it is not worth. But yeah, just in case that I need the money uh,
Mm.
to pay the medical bills, I think this may not be a choice for me because I need it. I need
Yeah.
something uh, to protect against the risk.
Mm. Yeah.
Yep.
And I also do the calculation,
Mm.
but the website I use can see the chart. Mm.
Oh, okay.
So I'm using the investor dot government. Yeah,
Oh, me too.
investor.
Me too.
Okay. Yeah.
The same one.
Mm. Yeah. So below you can see the chart.
Mm,
So
yep.
if let's say you see the year 10.
Mm,
The year 10 your total contribution is just 24K.
mm,
And uh yeah, the money the net present, sorry, not net present value, is the, yeah, is the future value. Okay, is the future value is 38K. Mm.
mm,
So the difference is not so great. Mm.
mm.
Yeah.
Yep.
But if you move to 20 years,
20
and
years.
yeah,
Okay.
and then the difference, yeah, it it's become quite significant. Mm.
Mm,
It's
yep.
it's more than it's more than one times. Mm.
Mm,
Yeah.
yep.
And so may I know how much coverage of your medical insurance?
Okay, for this, there is no limit for lifetime, but for annually, I can claims not up to sorry, I can claims up to 900K.
900K.
Yeah, this
Oh,
is
yeah.
annually.
Mm. Yeah. So that's mean it's quite good, is it? Mm.
Um, yeah,
900K.
yeah.
900K is nearly 1 million. Mm.
Yep.
Yeah. Yeah. So I think the insurance is good for that. Mm.
Mm, yeah.
Mm. Yeah. So
Mm.
that's all for sharing.
Yep.
Okay.
Yeah, you
Mm.
may start yours.
Mm. I also have one medical. I also have one personal insurance.
Mm,
I think this is a combination of medical and life insurance. I'm not sure.
mm,
Mm. And my monthly my monthly contribution, my monthly installment is uh monthly contribution is
mm.
something like 260.
Oh,
Yeah,
okay.
yeah, it's like 260 to 270. Mm.
Oh, why they will have a difference? Or you can't get the exact figure, right?
Yeah, I can't get the exact
Oh,
figure.
yeah, yeah.
Mm.
Okay.
Yeah, and I also not sure what's the coverage. Yeah, but it seems
Mm.
like it's about 1 million.
1 million. Oh,
Uh,
it is also annually, like.
I think yes. Yeah,
Mm.
I'm not sure. Mm,
Yeah.
yeah, and this insurance is bought by my mother. She
Mm. Mm.
actually mm, she bought the insurance when I was very young.
Mm.
Mm, like 10 years old or less than 10 years old.
Mm.
Mm, yeah, and,
Yeah.
and at that time I don't know. Mm, and after I reached like bit 16 or 17, then uh then then my mother told me, and actually not my mother told me. Yeah,
Mm.
I asked her. Hmm, I
Mm.
asked her something, and she tell me her situation, and she got quite a lot of expenses, and her income is not enough to to pay for my college fee.
Mm.
And at that time we do some calculation mm, to decide what we should do if we really want to uh, s- uh, study in the college.
Mm.
Mm.
Yeah.
And then she tell me her expenses. Mm. So at that time, uh, I knew that my mother actually bought me an insurance. Mm.
Mm.
But what I feel at that time, mm, I feel at that time I feel it's so stupid. Mm.
Mm.
Yeah.
Yeah, you
Uh,
think it is not worth, right?
yeah, because considering the situation at that time, the insurance premium is like 300 or 250 because
Mm.
got 100 or 50 is go to the investment. Yeah,
Oh.
it's just an investment linked insurance.
Mm.
Mm. And in these few years we managed to get back about mm, about uh 13K. If I'm not wrong, it's like 13K. Mm,
Mm.
yeah, 13K. So yeah, because I cannot accurately calculate the money installment is not paid by me, it's paid by
Mm.
my mother, and I
Yeah.
didn't get the full information.
Mm.
So uh if I use 250 times 10 years
Yeah.
and 10 years from since I'm young uh until like 17 or 18 years old,
Mm.
this is like 30K. Mm, yeah, it's 30K. And at that time, uh we managed to get back like uh 13K. Yeah, 13K.
Mm.
And inside I remember inside still got 1,000 or 2,000. Mm,
Oh. Mm.
yeah. And we had never claimed the insurance. Okay. Uh okay, but if you look at the amount, mm, uh our our total money contribution is 30K. Okay, yeah,
Mm.
250 times 12 months times 10 is like 30K. Mm, yeah,
Yeah.
30K. Then we already get back the 13K. Yeah, 13K.
Mm.
So it seems like quite good, right?
Mm.
Mm,
Yeah.
yeah, because we only um we only pay for 10 years, and a 10 years insurance is like 28K. Mm. And maybe future we still we still can get back some money. Mm.
Mm. Yeah.
Yeah, but if you use the 250 to do the compound to do the compound interest rate,
Mm.
mm, and 10 years will will become a very will become a great amount. But in this case, I will use 15%.
Oh, yeah. Wow, 60K is it?
Mm.
For 10 years,
Mm.
and
Wait a
then
minute.
250 a month,
Yeah, 250 a month, 10 years.
15% interest rate.
Okay. So, wait a moment. What's the amount?
My amount is 60K, 60K 911.
Yeah. And now my mother still don't have this 60K. Her saving is something. Her saving is, I think, is less than 5,000. Or less than 10. Less than 10,000. Yeah. Be optimistic. It's like less than 10,000. And yeah, she just waste the time. Actually, she can do something better.
Yeah.
And you may say, if something happen, I get some illness, then 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 how can she pay my medical fee, right?
Yeah.
Yeah. If I was her, and I'm very poor, okay. I'm the situation cannot earn a living, and I have a child, okay. Then will I buy insurance for my child? I won't. I won't buy insurance for my child. Yeah. I will try to save more money and try to do the investment. And if my child got any other medical issue, okay, and first I will seek for some assistance. Yeah, because there are some organization that will help you to do the funding, right?
Yeah. Yeah.
Yeah. First, you can go search. You can go seek for the organization. For this organization. Yeah. And if at the end, if you can't get any help, just wait my child die. Yeah. Yeah. So in the past, I told you, I actually don't have uh I don't have the high moral value. Yeah, in this case, uh yeah, I uh I have the same attitude. Yeah, same attitude to that. Yeah, because all this is the risk. Yeah, you have to do something. And if you don't do anything in future, you you still will get the same problem. So you have to start to take action. And in the case of you don't have enough income, and your expenses keep increasing, and you also can foresee 10 years later your job may be replaced.
Yeah.
And at that time, yeah, who you are going to rely on? Rely on your child? Maybe you can't rely on your child. And maybe in these 5 years, in these 10 years, or in 15 years term, you are not able to pay the insurance premium, and your child also are not able to pay the insurance premium. So at the end, you still need to cut. Yeah, you still need to cut off. You still need to cut off the expenses.
Yeah.
right?
Yes.
Yeah. So yeah. So actually this is my thinking method. And insurance really take quite large portion of some people income.
Yeah.
And to me if insurance take more than 5%, take more than 5% of the income, you shouldn't buy the insurance. Yeah, so this is just my opinion.
Yeah. Yeah. So so for now, is your personal insurance still ongoing?
Yeah,
No,
still
right?
ongoing.
Oh, ongoing.
Yeah, still ongoing because she she already she already buy for 10 years already. Yeah, so just continue because now the insurance premium take less than 5% of my income, so
Yeah.
it can be acceptable.
Yeah.
And also if you in a family, if you want to buy insurance, you shouldn't buy insurance for like for your child, for the family member that cannot earn income. You should buy insurance for the person who can earn income. And without that person, this family cannot be sustained. So do you get what I mean?
Yeah.
You have to buy insurance for the person who maintain the living of this family.
Yeah.
Yeah. For
Yeah.
example, you are in a family, you have three child. And let's say your wife is a housewife. She don't have she don't have job. And only you earn the income to sustain your family, to sustain the whole family.
Yeah.
And let's say your income is just like let's say your income is like 4,000, 5,000. And would you buy insurance for whole family? Whole family is like five person. Yeah. If one person
Wow.
200, but this I underestimate the amount because for adult the insurance premium is higher, right?
It's higher, right? Yes.
Yeah. And in my knowledge, the minimum and also uh, if the child below like 5 years old or below like 10 years old, the insurance premium is also quite high.
Oh.
Yeah. And yeah. And uh and the insurance premium will become lesser after the child grows like 10 years old, or close 5 years old. I forget already. Yeah, because below an age, the child will have higher risk to get some illness.
Yeah.
Yeah. Yeah. So yeah, if let's say you use 5 members is take your 1,000 salary. It's 20%.
Yeah.
And you are not going to do that. What are you going to do? You may buy a high spec, quote unquote, high spec insurance for yourself enough.
Yeah, which we can get a compensation in case we have accident or we die. Is it?
Yeah. So the family still can be sustained. Yeah. So actually, insurance is something like the hedge. You do the hedging.
Mm.
We don't buy insurance for earning the insurance compensation.
Yeah.
This is just a hedging.
Mm.
And okay, if let and also, okay, if you are if this is my mother case, okay, she buy insurance for me. And we and can you imagine the insurance company pay the full medical bill? And my mother don't need to pay any cents.
Yeah, I
Like,
don't know.
yeah, I also cannot share, right?
Yep.
And my mother still also still don't have the money. Also don't have the money to pay like maybe 10% of my medical bill. Or 15%. Uh, where should finance the amount? Maybe borrow from relative. Yeah. And it will also make her life so tough.
Yeah.
Yeah. So why not? Why not you take the risk? Yeah, because many people they overestimate the risk. Yeah. And underestimate uh some future risk. Yeah. Uh yeah, so this is my shame for today.
Yeah. So yeah, I heard my father say insurance to him is something like it is more for the poor than the rich. So if he was poor, and then maybe he would consider. If he was uh, uh, more than average, I mean rich, so he will not consider. So in your opinion, both rich and poor, you won't consider an insurance. Am I correct?
Uh I mean, sir, you should buy insurance. You should buy insurance if you afford uh if you can afford the insurance. Okay.
Oh. Mm-mm.
Because insurance is a hedging method. For example, now let's say there's one person he earn like 10K per
Mm.
month. Let's say he earn 10K Malaysian ringgit per month.
Yeah.
And his family only got his mother. Yeah, and his mother already like 50 years old or 60 years old.
Mm.
Yeah, even though maybe his mother can earn like 3,000 or 3,000, 2,000 or 3,000. But
Yeah.
how much salary you can expect the mother can earn 10 years later, right?
Mm.
So now the person he earn 10K per month. Okay, if something happen, then then uh then how his mother can live for the remaining life.
Mm.
Yeah, now maybe his mother is like 50 or 60, still got 20 years or still got like maybe 30 years.
Mm.
Yeah, who are going to support this family?
Yep.
So insurance is a hedging. And you won't buy insurance for your mother. You won't buy insurance for your mother, but you will buy insurance for yourself. You buy insurance for yourself. If you get any accident,
Mm.
if you get any illness, so you lose the earning ability. So you can get the compensation. So this is hedging. Do you know what is hedging?
Yep.
Yeah. For example, in the foreseeable future, you think you can earn 1 million. Okay. You think you can earn 1 million. So you buy the insurance that enough to cover 1 million. You get what I mean? Yeah.
Yeah.
So that means you'll be okay. Yeah, you'll be okay. So for example, if nothing happen, you still can earn the 1 million. Because in the foreseeable future, you can earn the 1 million. And if something happen, you still can get the 1 million from insurance company. Yeah. So in this case, you'll be very safe. So this is the hedging.
Yeah.
You can also say this is something like buying a futures contract. Yeah. You lock a price. You lock a price in you lock a futures price, and you don't buy. You don't buy the thing at the current spot price. And you lock higher futures price, and this higher and this futures price is high. Yeah, it's very, very high. Yeah, the spread, the gaps is between the futures price and the spot price is very, very great. So it's worth for you to buy. So to me, insurance is something like this. And if you want to say rich or poor, who should buy insurance? Okay. First, if the poor people, they can afford to buy insurance. They also can buy. Okay. They also can buy. Yeah. And rich people sure can afford to buy the insurance. Otherwise,
They are not
they can,
considered rich.
yeah, they are not considered as quote unquote rich person. Right. So rich person should buy more insurance
Oh.
to hedge for their asset, and hedge for their income earning ability. So for example, you buy a house. Like, let's say, like 400K. Hey, we actually can buy the insurance. If we die, we don't need to pay. We don't need to pay the mortgage loan.
Oh.
And the house still belong to us. Still belong to maybe your family. If you after you die, do you know this?
I heard it before, but I don't really know it.
Yeah. And for my case, my housing price is the value is 169. Yeah, because there's 30K government support. Okay. Oh, yeah. The yeah. I think the insurance is cover the mortgage loan only. Yeah. So I pay like less than 4K, less than 4,000. If I'm not wrong, is something is around 3,500. Okay, 3,500. To insure, yeah, to insure to insure 100 139K 139K mortgage loan for 35 years.
Oh,
Yeah.
35 years.
Yeah. So in this case, will you buy? And this 30 and this 3,500 is include in the mortgage loan, so you don't need to pay the insurance in advance.
Oh,
Just
so
increase your monthly installment.
So it means that the total premium I have to pay for this particular insurance is total up to 3,500, but it's
Yeah.
divided into our monthly mortgage.
Mm.
Oh yeah, so definitely yes,
Yeah.
good offer.
And this is 35 years,
Yeah.
So in these 35 years, if you get any accident, your house still belong to your family, and your family don't need to pay the installment anymore.
Wow.
Mm.
Yeah, it's good.
Yeah. So in this case, we should buy it. We should buy the insurance. Yeah, because the additional money installment won't take 5% of your income.
Yep.
Definitely.
Yep.
Yeah. And you are doing like the hedging. So if you don't buy the insurance, okay, if in these 35 years you get something wrong, yeah. Let's say you get an accident and you lose you uh you lose the income earning ability,
Yeah.
and you don't have that insurance, so you still need to pay the uh in-law you still need to pay the installment, but you can't pay the installment. So you then at that time you just lose your house. You lose
Yep.
your house. Yeah. Yeah. Even even if uh even if you you already paid the installment for like 30 years, but the remaining 5 years you are not able to pay the installment. Yeah, you still can't uh you still will lose your house.
Yep.
Mm. But if you have both the insurance, so it is the hedging. So if you get something illness, or you die, okay,
Yeah.
you die in an accident, okay, then the house still belong to your family, and your family don't need to pay the installment.
Yep.
Yeah.
Yep.
So uh this is why this is the case we should buy insurance when we are affordable. Yeah, this is the example.
Yeah.
Yeah, and you
Yep.
can replace the house. You can replace the house to any other thing. To your income earning ability. But for example, now let's say you earn like 6,000 per month. So yeah, 200 just take like 3%. Is it 3%? Yeah, 3%. 3.33% uh of your monthly income. Yeah, and if you don't buy the insurance, if you get any like any illness, then the medical field can yeah can more than like 100K or 200K, and you cannot pay the medical bill. Right.
Yep. Yes.
So maybe at that case, mm, uh okay, let's say there's one person, mm, he earned like 6,000, okay, and he got the cancer. He got the cancer in the first stage. Okay,
Yep.
so uh actually he can recover. He can recover from the cancer. Yeah, because this is just a stage one. The cancer is just in stage one. And if they didn't buy insurance, how can he pay the medical bill? Let's say the medical bill is like 100K. Yeah. And if you earn like 6,000, how much money you can save per month. Let's say you can save like 4,000.
Yeah.
4,000. You use 100K to divide it by 4,000. It still need like more than two years. Yeah, and this is your total saving. You get what I mean?
Yep.
You use your 2 years total saving in order to cure your cancer. Yeah. Then why not you buy an insurance? Right.
Yep.
You buy insurance, and you'll be safe. You'll be safe in for the remaining life. Right.
Yep.
Yeah.
Yep.
And let's say now they can use like 100K. Let's say you can save up to 100K. You can save 100K in 2 years. Okay. Then how about next year's? Maybe the cancer comes again.
Oh my God.
Right?
Yep.
So it's about the hedging. Insurance is a hedging tools. You are poor, you are rich, you can buy. But if you are really poor, you should consider. You should consider, because the maximum risk you can you have to suffer is dying. Yeah. Yeah, you just die. Or we can say the maximum risk you'll get is like losing the income earning ability. If let's say you get a serious illness, okay, and the medical bill is also like 100K, but your monthly income is just 1,000. Yeah, just 1,000. And after you bought the insurance is 200. So you just left 800 per month.
Yeah.
Yeah, of course. You have chance to get the get that illness. Yeah. But even though even if you buy insurance after you get the illness, you will also have a very, very tough life for your remaining life. Yeah. Maybe after you claim the insurance, your insurance premium increase.
Yep.
Yeah. And it will eat more portion of your income. Yeah. And maybe you cannot fully claim. Yeah. And also maybe after the curement, you lose your income ability. You lose your income earning ability also. Yeah.
Yep.
So if you just earn like 1,000, you should put the money on the knife edge. Yeah, you should put you should put every cent on the knife edge. And the insurance premium, definitely is not the thing on the knife edge.
Yep.
Maybe you should use the 200 to study more. Yeah, to get some certificate so it can increase your income. Yeah. So after increase your income like 1,000 to 2,000 or to 3,000, then at that time you can consider to buy insurance. Yeah, even though it is in my opinion, because this is in my opinion. My opinion is insurance premium should less than 5% of your monthly income. It doesn't mean that everyone should follow this.
Yep.
Yeah. But definitely, if you just earn 1,000, you shouldn't buy insurance. Yeah, at least you need to earn like 2,500 or like 3,000. Then you can consider to buy insurance. If you just if you just earn like 2,000, insurance is take like 10% of income.
Yeah.
And after deduct all the expenses, you left nothing.
Yep.
Yeah, and it also you also can link it to the previous topic. I also mentioned that nowadays we actually need to take more risk. Okay. Mm. Uh. Okay. But for insurance is a hedging tools. Okay. It's a hedging tools. Mm. So you shouldn't take risk. Yeah. In this case, you shouldn't take risk that not to buy insurance if you are afford to buy. Yeah.
Yeah.
Okay. But in other area like investment, or your on your career, you should take more risk. If you do nothing in future, you also will left nothing.
Yeah.
Yeah. So in this case, there is a similar point. Similar point. If you are really in a very, very bad situation, you only earn like 1,000 or 1,500. Okay.
Yeah.
In this case, what you can do, you just can take risk. And it doesn't mean that you have to risk yourself for the whole life. You cannot buy insurance for the whole life. No, this is not the case. Yeah, use that money to improve yourself, to increase your income earning ability. And maybe it will take like 1 year or 2 years. So it is just 1 year, 2 years. Yeah. Yeah, don't overestimate the risk. Right?
Yeah.
Yeah, in 2 years time, if you really get the illness, then no choice. Right.
Bad luck.
Yeah. Yeah. And use the money to increase your earning ability. Maybe you just need maybe for some people they just need 3 months or 6 months, right?
Yeah.
So if you really worry about that, then you should study more hard. You should work more hard to reduce the time frame.
Yeah.
So after you get enough income, so you can balance it. You can start to buy insurance.
Yeah. 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 For the age of 20 something, I think the time is really crucial because every 1 year late, the premium will be higher, right?
Yeah, higher, but okay, but if you calculate how much can it higher, let's say from 200 become 250, so the
Yeah.
additional 50, if you time 12 months, okay, and then every year you need to pay additional 600, and additional 50 per month. Yeah. So how much it can increase?
Yeah.
And you also say you start to buy insurance at 25 and you get 200 price, right?
Yeah.
Yeah. And yeah, so uh at 25 and at 25 years old, 200, this is considered low already. In the past, the insurance is more expensive.
Yeah.
And also yeah, just want to make one point. And I also okay, we shouldn't buy insurance just because in the future the insurance premium will become more expensive, so we have to buy now. This is totally not the case. We are not doing a rational decision.
Yeah.
If you are unable to afford the insurance, you shouldn't buy. That's it.
Yep. Yep.
Yeah, so this is my strength for today.
Yeah, me too. I also finished my talking.
Okay, so that's all for our today conversation. How do you feel? Did you enjoy the conversation? Please tell us what you think of our conversation. And we are not native speakers. If you found any vocabulary mistake that we made, please also comment to let us know. Because we want to learn more and improve ourselves. Remember to like and subscribe to us. Thanks for watching. See you tomorrow.
See you tomorrow.